November 19, 2013. This is a chart of the IWM December 102 put. The IWM represents 2,000 of our middle corporations in America. The 102 put is purchased when the market appears to be going lower. If the market is going to go lower, then the put goes up in value. When the market goes higher, then this put goes down in value. Notice that about 2 weeks ago that we had 2 positive units or green units on a Wednesday. And if price could go higher, we would think about buying the put. That means the market might be going lower. Well, at 65 cents per share or $65 per contract, we did get above that couple of positive day units here on the chart. And this ceiling, this area of congestion here represents a ceiling or resistance. When it broke through $65 per contract, it quickly rose up to $85 a contract, and 3 days later was as high as $95 a contract. So then the market began to find support or bottom, and then the market went up. So this put went down in value. We did have a couple of positive days a week ago, but price couldn't go higher. Then the market continued to climb, the put fell in value, and then in the past 5 days we had a couple of positive units, and that put in a resistance or ceiling area above price at about 43 cents per share or $43 per contract. Here in the last few minutes, the price did move above this ceiling area. So if we wanted to buy a put contract, which actually is betting on the downside of this symbol, the IWM, we're betting that it might be going lower, then we would go to the trade tab and enter an order to buy 1 or 2 or 3 contracts. Currently, we can see that that contract is at about $43 per contract. So if I wanted to buy 2, that would cost about $100, including commission. And that would control 200 shares of this IWM. Remember that a week and a half ago that the IWM itself was going up in value, therefore the put was going down. But here recently, the IWM for the past 5 days has broken an upward pattern and is beginning to go lower. And at the moment, we've fallen from about $111 a share down to currently we're about $109 per share. If we have another couple of units that go lower, then the put contract would go up in value. To see the price of the put, we would put in the symbol and get what we call the option quote page. We have the calls on the left. Calls are what we buy if the item like Home Depot or IBM or the IWM was going higher, we would buy a call contract. It's a leverage play. It's kind of like buying a house with a small down payment instead of paying cash. So if we're betting up, we come to the left side of this quote page and buy a call. If we think the market is going lower, we move to the right-hand side and we buy a put. So that $102 put that we were looking at on the chart is currently quoted at $43 per contract. We see that there's 80,000 players that like that contract, and about 1,400 of the players, this is just an analogy, There's 80,000 contracts in existence, and 1,400 were played today. It's like having a stadium of 80,000 spectators, and 1,400 of them go down on the field to play the game today. So this is a very active level for the IWM. Just to review the stock chart of the IWM, it was up for a number of days, and then we've been down since Monday, and today is Tuesday on this hourly chart. And to review the put chart itself, we see that when the IWM was going up, the put chart was going down. It fell from roughly $55 per contract down to $26 per contract. So just recently, a week ago, it was as high as $60 a contract. It's currently $43 a contract. If we get as high as we were a week ago, we would be back up to $55 or $60 per contract.